Good morning, good morning, good morning. How's everybody doing? Somebody give me a sound check. Let me know if you hear me okay. No. Good morning, good morning. Sorry, I'm just dropping stuff off here. Um, I am going to just say hi to everybody, make sure everybody is in the room, and um, just keep the seat warm because I want Kay to start, her usual stuff. I want her to go through the macro stuff. Let me see if I can just share my screen for a second. I'll be able to share my screen. You should be able to see my screen. Did a little bit of trading here and trying to do a little bit of trading to the upside here. I have a lot of interesting stuff to talk about, but I kind of want to save all the trading stuff until Kay is done with her with her part of the webinar. So if you have any questions, those of you guys who are new, type them in chat, ask Boris. Somebody was asking me today about how do I find out the vaccine news before it hits the tape? And the answer to that, of course, is you can't. There's two types of news events. There is the pre-planned news events, which you can see on the economic calendar, and those are, of course, the least market moving because everybody knows what's going to happen with them. And then there are the unplanned events, which are the most market moving, and the vaccine was, of course, the unplanned event. And it was also really, really crazy in terms of reaction. Let's take a look at the reaction here. So here you can see my chart over here. This is NASDAQ. Vaccine news comes out. It looks like it's just massively positive because Moderna comes in with 94% accuracy, but then it literally reverses itself completely. This is such a great signal. Assuming you know what the news is. The reason why there's such a great signal is whenever you have news that's seemingly positive and the price action is negative, it's almost 100% guarantee that the price action is correct. So one of the reasons why NASDAQ seemingly, against positive news, flipped itself around completely was because it's just basically rotation out of growth into value, meaning that if vaccine comes in, the basic supposition is that all of these work from home names are going to lose some of their power right now, and real companies, quote unquote, are going to get more customers. I actually think that's a nonsense point of view. I think we've radically changed the economy, and we're never going back to the way people think the economy is going to be. But it doesn't matter what I think. It's just the point is that the market sentiment switched, and when you see that kind of a switch in market sentiment from very, very positive news to very negative price reaction, almost a guarantee of downward action. And I was very patient. I essentially shorted this, so you can see I shorted the break of the up candle over here. There was actually lots of I could have shorted this one over here, but I was away. There was also great reversal trades too happening. I actually, in my other account, took this reversal trade here, and before that I had this reversal trade over here. We'll talk about all of the ways to trade trend and reversal, especially in moving markets, because that's really what we want to do. Nothing works for us, nothing worse for us than non-moving markets. But we have trend. We can trade both trend and counter trend really, really well. So Kay, I think, is in the room, right? Kay, are you in the room? Let me see if she's here. Okay, she said she's logging in. Let me see. Okay, are you in? Let me see if she's around, guys. Just bear with me a sec. She's here, but I don't hear her. We don't hear you. I don't know why she's not. She's having some issues, I guess, with her mic because I don't hear her. So I'm going to give her a few seconds to log in. Okay. All right. Anybody got any questions for me in the meantime? on what's going on. You don't have speaker credentials. Oh, I don't know why. Okay. She took control. Hello? Does anybody hear her? Nobody can hear her. Okay, let me text her. Let me text her. I don't know why she's not.
Hi everyone, this is Kathy.
Okay, well, okay, we finally hear you.
I don't know what's going on with my computer either, so I had to do the dial-in instead over my phone. I'll have to try to figure it out later. Thank you all for your patience. I had to drop off my kid this morning, and traffic got a little crazy. So, yes, thank you for your patience. I'm sure Boris fully entertained you. So let's go ahead and get started. We had a great 24 hours in trading. We made some really nice tippage, good ideas all around. You know, just continuing to prove the efficacy of the ZIP strategy, of the fundamentals, of respecting, you know, kind of what the other markets are telling us. And the reason why I'm saying that is because we exited Swiss yen earlier than our other trades, which was the right idea because it was the one trade that was counter to what stock futures were doing. And, you know, kind of early on, we identified that it's a risk on day and kind of skewed ourselves in the direction of risk on. And that kind of gave us the nice moves that we had. Of course, you know, the Moderna announcement certainly helped, but, you know, even before that, we were in profits and we had taken some money off the table, and just kind of, you know, shows the importance of using fundamentals with technicals. So, you know, we did that last night. We had some Asia session trades. I'm trying to be more aggressive in Asia and Asia and New York, so that all of our members can participate in our ideas. And the real thing that I want to impress on you is that the way I trade, it's about high probability, not high profit. So any trade that you take in the Asia session, the New York session, it's not as if one is better than the other, although it seems like the Asia ones tend to be better than the other because I'm more patient. But still, in terms of the actual call itself, each is just as high probability as the next. So it's not as if you're missing something by only focusing on one session versus the other. I mean, you of course are missing out on some pips, but you know, you could also just focus on one session, you'd just do fine. In terms of the outlook for the week, not much has changed in terms of our fundamental view. If you take a look at this heat map, which I posted into the room earlier, you will see that I'm dollar bullish. All of this Moderna news is very good for the greenback and drove dollar yen higher, euro dollar lower, and, you know, at least the dollar higher against countries that are still really, you know, grappling with COVID-19. Australian dollar and New Zealand dollar are outliers, and we've talked about this often because they've beaten it out, and, you know, money's flowing in that part of the world, plus this really important trade agreement between the Asia-Pacific nations, which basically account for 1/3 of the world's GDP, is also wildly positive for those currencies. That's kind of why we leaned into the Aussie long trade, because, you know, we really believed in it, or I really believed in it. Still bearish euros. Still think euro has absolutely zero business trading closer to 120 than 116. This this should fall. I mean, Germany talking about multi-month lockdown. Obviously, Eurodollar right now is zipping positively. Sorry, I didn't want that. Eurodollar is giving us a zip long trade, which we don't want to touch because it's soundly counter to fundamentals and is one of those trades. Is the reason why we fuse fundamentals with technicals, because we don't want to be, at least in my opinion, I mean, it could be different, but we don't want to be caught in these false signals. But I'm still bearish euros. I still think euro is going to underperform against everything. And ECB expected to ease. They said that there's probably going to be a contraction in the fourth quarter. Things are definitely going to get worse before they get better. What's really disconcerting is that they are, I think, 3 weeks now, or maybe even 4 weeks in some places, into their lockdown with very little improvement in the the whole situation, coronavirus situation. And so many nations are feeling like they need to double down. They need to extend that lockdown that was set to expire at the end of this month. And that is only going to curb growth further because their lockdowns are stricter than the lockdowns we had in the US. So bottom line, I've been bearish euros. I'm still bearish euros. I think we're just going to wait for those sell opportunities. Also bearish pounds, UK-EU trade talks going nowhere. And UK, same story. They're grappling with COVID-19. It's probably going to extend a lot longer than we all anticipate. And it's a big deal. And I'm still bearish pounds. I'm bullish Aussies, and I'm bullish Kiwis. Those countries have got a nice little they've gone through the second wave already. They've survived it. They're open. Their economies will benefit. Money's flowing to the parts of the world because they're the only growth stories. They're benefiting from this trade agreement with China. They've been outperforming for a while, and I think they will continue to outperform. Loonie is a little bit more precarious. Obviously we were very much long Canadian dollars today. CAD Swiss, CAD yen, dollar CAD, euro CAD. I was kind of spotted that as a key opportunity, and we really pressed that trade for profits. But fundamentally, while I think the outlook for Canada is definitely better than the outlook for for the US. They also have the second wave happening, and I think that, like the US, they're going to have to get a little bit stricter, and it's not as positive as Aussie and Kiwi, and data could start to deteriorate. There's just a bullish Kiwis. Obviously, we talked a lot about that. They're doing a great job. Data's been good. The PMI manufacturing numbers were really good. So overall, good news for New Zealand. I think it's going to continue to be a positive outlook. Swiss franc and Japanese yen, I'm bearish. I think for the most part, this whole risk-on story, even though I think stocks should fall, they're not. We've got to recognize that. And I think it's really going to continue to press higher. Okay, so with that, I am going to go ahead and go through the economic calendar with you. Yesterday, we had Japanese GDP numbers, which were doing better. Asia in general outperforming, which is why the money's flowing in that region. Chinese retail sales was a little weaker, 4.3%, but industrial production was stronger. There was a holiday in there, which some people think will basically impact how things move. And so, I'm watching. I'm watching those numbers, but in general, China is doing pretty okay. Today, we had some numbers in the U.S. and I guess Canada, but Canadian data is not that important. No surprise, U.S. Empire State Survey deteriorated a little bit, and I think that's going to continue. I think it's indicative of just kind of the broader story. And yeah, I think that's something that, I'm watching very closely. I think, we are going to have a situation where data in the US starts to really take a turn for the worse. Next 7 days, we have RBA speaking, but not consequential. I mean, basically, RBA Lowe spoke this past weekend, and he basically said that if other states or other countries think about negative rates, we'll think about them, but right now it doesn't seem like something they're really seriously considering. One of the most important releases this week will be retail sales. October was not a bad month. October, many states remained open. I think, retail sales should meet expectations, maybe even beat it. October was definitely not a bad month for U.S. consumer spending, and I think that's going to very much remain the case. And I don't think it's going to be that detrimental to the greenback. Industrial production numbers, same story. October, once again, it's really November that things really deteriorated, not October. I think that's important to keep in mind. Some minor data from other countries, speeches from Governor Macklem in Canada. I think that'll be interesting to watch. We also have Biden and Harris rolling out some of their economic plans today. So we're announcing it. They have a speech today. So that is something worth paying attention to. And then ECB President Lagarde speaking. Sorry, my calendar's scrolling. This is all on the calendar. And then tomorrow we have UK inflation data. Both CPI and PPI numbers are going to be released from the UK. And, slightly stronger shop prices are expected on this front. So these numbers could be hotter. The BOE, when they last met, did not downgrade their inflation forecast, which I think is quite telling. So that could lead to stronger inflationary pressures. Eurozone also has inflation data, but these are revisions. U.S. has Governor Wilkins speaking in Canada. Canada's got inflation data, and there should be stronger numbers because the IV PMI component increased, so it's supposed to go from negative to positive. U.S.'s housing starts, low interest rates to continue to fuel housing activity. And then Australia's got labor market numbers. Another reason why I'm bullish the Australian dollar, because we do have stronger labor market conditions reported by the PMI. So yeah, that's something that is very, very important. And then on Thursday, we have ECB President Lagarde speaking again. We have U.S. Philly Fed survey, which should be weaker, jobless claims, and existing home sales from the U.S. And then we go to Friday. Australia also has preliminary retail sales on Friday, their time, so the numbers are supposed to be stronger. And then in the North American hours, we have UK retail sales, which should be weaker because BRC reported weaker sales growth. And then lastly, Canadian retail sales. And we'll have to see how wholesale sales fares be, but decent labor market conditions should bolster Canadian data. So yeah, I mean that's looking pretty good there. So now let's go to the charts. So Eurodollar and the Fed do not buy into this. It's fading already. Eurodollar daily charts look strong. 4-hour charts still look pretty good. But I'm bearish. I do not think you should be buying, even though fundamentals say that it's bullish. Dollar and yen actually looks weaker. It looks like it's rolling over. on the daily chart. 4-hour charts are a little bit more bullish. I'm bullish dollar yen. So fundamentals are kind of counter to technicals. So I would also kind of stay out of that. But I think dollar yen technically looks weak, fundamentally looks strong. Pound dollar, I'm bearish. I think I should pull down, but once again, it's not really doing that, so we have to be careful. Dollar Swiss, just consolidation, nothing really going on. But ultimately, I'm bullish dollar Swiss because I'm bearish euros. And Kiwi dollar, very bullish. I think we're going to hit 70 cents. Aussie dollar, also very bullish. I think we're going to test these highs minimally, probably breach it. Dollar CAD to be a bit more careful, but definitely a situation where we should see a bit more weakness in dollar CAD. All right, so now I'd like to turn the floor to any questions you may have or any charts that you may want to look at. Southern Australia, South Africa, Australia borders are being closed off to them. Yeah, there is definitely a little bit of a situation happening. I read that, Tasmania is also closing borders in South Australia. I'm definitely going to keep an eye on that. But 17 cases is nominal for now, so we will see. I did not know that Toronto is going to lockdown, Rob. How deep of a lockdown are you guys going to, or are they going into? Definitely, all these are things to pay attention to, but not blowing up like Europe and the U.S. Okay, so non-essential travel is nothing. Is it no one's traveling anyway. What about non-essential? Is it non-essential movements outside of your home or non-essential leisure travel? That's really where the key is. Okay, so yeah, don't leave the home is a pretty big deal then. So yeah, that's why I'm worried about that. And that's why you heard hesitation in my voice, because while I think data is going to be good this week, I think they're doing much better than everyone else. Even before learning from Rob that Toronto's going lockdown, I sensed that they really needed to, and that's why these moves are getting overextended. We have to be careful, and it will be about who gets worse faster, who announces more extreme restrictions. Those are all things that will affect our trade. So we'll be watching all of that closely. Any other questions? I think stocks, maybe Boris can shed some light on stocks because, obviously all this vaccine news is great, but, all these countries, including the U.S., is going to register a tough fourth quarter. And that is not at all reflected in equity prices.
Hey, guys. Okay, should I take the screen over, okay?
Yeah, please.
Okay. Let me take the screen. Let me see what screen we're showing here. This one. Okay. Everybody looking at my monitors, right? We've got the stocks up. While Kay was talking, I was kind of pre-trading a little bit, just for fun. I didn't want to call them out because this is all pre-market trades. But I actually, if you can see over here in the history, I took a trade to the downside in the DAX, trade to the upside in the NAS. Obviously, knowing that this is pre-market, so therefore I really didn't want to hold on to them for too long. But the principles were pretty much very much in line with what we're trying to do here as far as trade what I call failure or trade surprises. So the NAS trade, as you can see, NAS basically, let's go full chart here. I talked to you a little bit about this at the beginning of the webinar. Market was selling growth, buying value, so NAS got hammered. But as I said to you, I actually think that the only companies that really survive well, regardless of what the economy does, is going to be the high technology companies. They're the ones that have the highest profit margins with the biggest cash flows and have been able to survive COVID. So there is, even though there was kind of rotation flows that we saw at the beginning of the day, you saw how this thing completely turned itself around, actually went positive slice right before the market. And then we had a couple of negative arrows, which we beat. Now, the thing that was a little frustrating is, like this, for example, this arrow over here, if we had entry over here, it would have been a beautiful, plus 10 setup, but this literally just missed our entry by half a pip. So what happened is this arrow was a trigger arrow. This arrow had already taken about 6 points of the potential profit out of the move. That's why I cut my trade short. But it doesn't, it still stayed true to our principles of essentially letting the failure work. Now, of course, we have the reason why I was also very, very nervous, because I knew this was going to happen, that, the rotation flows on the open, like the market to open orders are all going to be negative, because they're all going to just reflexively sell at the beginning, including all the retail flow. And I think after 5-10 minutes, we'll see if this stabilizes and actually completely reverses. In fact, if it does, it's going to be a perfect trade for us. We'll be looking for it the whole time. And then the DAX trade was actually even more interesting, because it was more, it was really a fade trade. So DAX is positive slice, right? Has a negative arrow here, right? But here's what happens that triggered my my desire to get short. This candle over here takes out the low of this breakout candle. And we already, like, we have a big separation of the moving averages, suggesting that the trend had established itself, and now the trend kind of broke itself. So getting short here, yes, I had a little bit of a couple of minutes worth of sweats over here, but then it eventually really took hold. I got out too early because I just didn't want to be in front of the news. But same principal idea, whether it works one way or the other, it really doesn't matter. Now we're like 30 seconds away from the open, so we'll see how the opening rotation is. I'm curious. Anything can happen. That's why I don't predict. I just want to be able to react. But generally, my view is that so far the moving averages are holding. We're essentially still positive slice. If we get this big open burst to the upside, like a flow that can take out the highs, great. If we get a big negative sell-off for the first couple of minutes, we'll just let that float out. Either way, we're going to wait until we get a little bit of if we get a couple of candles into the move. I really don't want to chase the first or the second candle on these moves, because opening rotation is always very, very funky. The natural trade is obviously all retail and everybody and kind of sheepgoat institutional are all going to be selling. But whether this is really going to be a negative trend day for NASDAQ, I think remains to be seen, because the news overall is positive for the economy, and therefore positive for high technology, even if work from home doesn't necessarily get the rotation at this point. Because remember that they're selling NASDAQ right now, not because they think it's bad, but just because they think the other stuff is going to catch up to it. So let's watch it a couple of minutes. If we're gonna scalp, we'll scalp here. I want to talk also a little bit about me trying to be more disciplined about trying to just trade 20-10, which I think is the sweet spot of where I want to scalp, instead of trying to take smaller 10-point stops, 5-point target kind of things, for a whole bunch of reasons. And we'll get into that as if trades develop. But let's just see what's going on right now. So now we got so they're taking selling flows as I expected. First minute, remember this is first minute, right? They're going to try and take it down. They took it below the 11.9. The much more interesting thing for us is, what happens after the initial sell wave happens, what happens then? One of the things, by the way, I absolutely love, and there's two trades we love to make: the continuation trade, the trend trade, and then the mean reversion trade. That's picking tops, picking bottoms. And of course, I'm a sucker for picking tops, picking bottoms. But there's a very, very specific way to do picking tops, picking bottoms that is much higher probability than just trying to guess what the turn is. And one of them has to do with the idea of like the moving averages being really, really as wide from each other as possible. Because the more parabolic move you have, then you have the greatest possibility of mean reversion when the market gives you the signal. Like a classic signal to the upside here. Let me just take this out, take this back with you. So after the huge sell-off, why is this not working? I'm trying to move this back. So here's huge sell-off over here, right? That's what we like to see, big moving average separation. And then once that happens, once the high of the red candle is taken out, usually by around this candle over here, yeah, you may have some consolidation, but you generally have a very, very nice move of at least 10, 20 points in your direction. Right now, nothing much is going on NAS. We're just watching the consolidation. Let's take a look at the CFDs. Let's see what's going on here. Dow has a much more negative tilt to it, right? NAS also has the classic buy candle fail. So instead of me trying to just blindly trying to pick a bottom here, I should respect that we're now negative slice, although this is really completely reversing itself. That's interesting. And really, a break of these lows is a legitimate sell candle. So we should just put a sell entry here. Watch this, because if the moving averages turn to the downside, then yes, absolutely. So I'll put it's a sell around 1904 here. So if we break the lows here, then we have high conviction that this is going to be a continuation trade to the downside. Actually, let's see, what are the futures? Do the futures have a signal on them? They do too, so we can trade the futures as well. So sell. Now we'll put this over here. See if it breaks the lows. The rotation flows may be much longer than just a couple of minutes. We could have a full half hour of sort of concerted selling, in which case we certainly want to take advantage of the sell side signals that are taking place here. On the other hand, we have these big reversal moves here. And I'm watching about 30 seconds, 20 seconds. Still a lot of choppiness. You see how they're really both, neither the bulls nor the bears can hold the highs or the lows. So it's very, very much two-way market right now, trying to figure out, which way it wants to go. But this is bullish. Like this, this big candle. I'm actually going to cancel this and just watch this right now. Let's say buy it. We're going to buy it. We're going to buy this candle with a 20 stop 10 target, because this broke all the highs. Let it flow. Let's see if this, maybe it's a big chase candle, and this is not a classic trade that I want to have. And I could get stopped out on just volatility to the downside. But let's see. I mean, this was a buyers really managed to kind of take out all the lows. Let's see if they can hold it for a couple minutes. I'm obviously not taking this trade on the CFDs, because that's not a legitimate CFD trade. But but let's see how it plays out. Let's see how it's doing on the futures. Futures are rocking. I think I'm just going to take the plus 15 here on the futes, which was like about, I guess, plus 7. But it really would have gone full 10. The reason I'm taking it less is because, is because just there's so much volatility. I just wasn't sure, but this was a great signal. You see, they took it, they took out the lows. They broke the highs, and then after, right now it's just running. I mean, I could have held it for a full 10, and it would have been fine. But just, another good example of our tactics in action, where I had a thesis, by the way, that I would, that I want to be long, but I was fully willing to entertain a short thesis if the market took me there. But my thesis to the long side needs to be confirmed by price action. I was talking to you guys about reading the Hidden Market Wizards book, Schrager. I was listening to more of it over the weekend. Literally, the single unifying tactic of, and by the way, look at this move right now. Wow, I as usual, I hope you guys banked more. All I can say is I hope you guys banked more, because I clearly never take the full profit. Where's my? Okay, Connie got it. Who else got it? Karen, are you in the traders? Karen around? Where are my traders today? Cheryl got it. Okay, so I guess you guys rocked it. But so what I was going to say is, okay, what's with this demo? What is this demo nonsense, Karen? I'm just kidding you. It's fine. I'm actually, I got a couple of really interesting things I want to talk to you about. I just want to watch a little bit of the market action just to see if anything else develops here. Let's take a look at the CFDs and see if I have anything on the CFD front. This I need to cancel because this is already way out of the zone. Dow is neg. DAX is negative, but not giving us any legitimate signals that we want to take. So where am I? Yeah, we'll just let that lie. If anybody sees anything on the charts, let me know. I'll just leave it alone. So okay, two really important things. The first one is the single most important thing that comes out of the trading book that interviews all the multimillionaire traders that are just like you and I, that are like literally retail traders who took like $2,000 and drove it to 50 million. What's the single unifying technique that they all do? They have a million different ways to trade. They have lots of different theses. Some trade trends, some trade, long-term fundamental breakouts, some trade, quick market reactions. Others trade completely contrary. One of the most fascinating guys is the guy who basically spends all his day doing the opposite of what CNBC says, which I thought was fascinating. But here's the thing: not one of them acts until the market confirms their thesis with price action, right? So for us, obviously, it's very easy for us to see because we're trading on the 1 minute chart. We don't need a lot of time to confirm. But whether they're trading daily charts, monthly charts, minute charts, whatever, the single most important technique to winning is to have the market confirm your thesis, right? And that's kind of interesting. All right, no, that's good. That's fine. And then obviously here, we had the market confirm our thesis, right? Blew up, took out the highs, and we just got long, and we went long with that thesis, right? Of course, it doesn't work all the time. Of course, it's not a guarantee for winning, but it is literally the only formula for winning, right? There's 100 different other factors that can always come in and sabotage our trades, or sideways, swipe out our trades, or do all sorts of things that that are unpredictable. That's just part of trading. That's why risk control is so important. But you cannot be successful as a trader, at least not after me reading this book, unless you do what we do in the live chat room, which is let the market action confirm your view. If you're long, the high's got to be taken out. If you want to get short, the low's got to be taken out. And if they aren't, you don't have a legitimate trade, right? So the difference is between a profitable trade and a legitimate trade. You always want to make legitimate trades. You can't control profitable trades, but you want to make legitimate trades. I make a million illegitimate trades, right? And what I'm really trying to do is I want everyone. The question at the end of the day, I want to ask myself: was every one of my trades legitimate? And if the answer to that is yes, then that's the best. That's really all you can do. And if the answer to that is ever yes, it's almost a guarantee that I'll be profitable. If the answer to that is no, which is like 90% of the time, it's always I'm always cleaning up my messes, by trading illegitimate trades. So that's one thing that I kind of want to talk to you about. The second thing that I want to talk to you about, and this is a completely counterintuitive insight that I had. We got no signals here, guys, so that's why I'm kind of putzing around talking. Let me see. Oh, sorry, is the Dow doing anything? Dow's got no signals. We got no signals anywhere, so I'm just we took the one good trade that we had, and that's fine. Yes. And the market, let's just be really, really clear. What do we mean by the market? We just mean nothing more than price. In other words, we have a great technique for what we do. That technique, by the way, I think is applicable on every time frame in any strategy. Kathy pretty much, without even knowing it, the zip technique is very much that. When you're seeing the zip candle, it's always taking out the lows when you're going short. It's almost always taking out the highs when you're going long, right? In fact, I haven't even looked at any of her setups in a while, but I wonder if if she just put that overlay on there, if there would be even a bigger, better, more cleaner confirmation of her trades. But that is it. You want the market to be. Oh, she says that's not true. Okay. No, I can't hear you, but. No, we can't hear you, but you can type. You can type to me. You can just be like everybody else and type back to me. But anyways, the point for me, or the point for us when we're trading, is we definitely want market price action confirming our most immediate trade, right? Like even right now, if we're going to trade mean reversion, right? Like right now, we could just fool around. Let's just fool around with this right here. This would be a quasi-legitimate trade. I'm just going to take this trade on the DAX just to kind of prove my point. Whether it makes money or not, I just wanted to show this as an example, right? What we have here is this candle. This is a mean reversion trade. We're trading a reversal of this sell-off that we've seen in the DAX, right? This candle over here took out the highs of this red candle, right? And therefore, it provides us with a decent possibility that the markets may reverse. Now, the problem with the reason why this is an example, not a real trade, is because what we really want is we actually have it in this case, so it's actually not inconceivable. The problem is I took the trade a little too because I was taking this on the fly. My execution was much worse than what it should have been. My execution should have been over here, and it was over here. But whatever, it's fine. Let's just watch the trade. The point being is that when we like to trade a mean reversion trade, we like to have at least two negative arrows, which we have, right? Which, like in other words, they kind of sold down, right? And then we want a reversal of that of those flows confirmed by the candle close being higher than this red candle, the previous red candle, right? Now, does this will this work? Maybe not. Is mean reversion, a great trade? It's only a great trade after we've had some serious sell-off, and this is just basically beginning sell-off in the marketplace. So the jury, this isn't a great trade. It's an okay trade, but it's a legitimate trade. The whole point is you want to try to make legitimate trades. Now this, this may stop us out, and it was an example trade, so I really have no idea, how well it's going to act. But the analysis of it wasn't bad. Even if it doesn't work, it wasn't bad. As a matter of fact, it actually doesn't work because one of the things that happened is that one of the reasons why this trade is probably going to stop us out is because it's actually failed this buy candle. So I made the mistake. Obviously, I wasn't watching the buy candle. I was showing you the examples. It's probably going to stop us out over here, so it's fine. This is all. I'm just doing this for educational purposes, just to show you the thesis. But if we'd taken this short, by the way, right over here, that would have been a good clean short to the downside, a continuation trade for us. I simply, I was just focused on making my point without looking at the chart very carefully, which is, by the way, another really, really good thing. You don't want to be, just monomaniacally focused on your idea without understanding everything that's going on in the chart. If you had a buy candle here, you certainly didn't want to, and that buy candle got broken. You didn't want to be in this trade. If this was a legitimate trade, you wouldn't want to be in this trade anymore. You'd want to reverse it. You want it to go down. I'm almost like very, very certain this is going to stop us out because this is actually exactly a negative trade, right? It went the other way for us because it broke the bottom candle. But still, the principles of the trade is what I really wanted to show you as an idea. All right, now back to real trading. Do we have any setups here? Nothing. There is one possibility here. No, not really even. I'm just watching this. So again, if you want to, and this is just my own little obsession. So you clearly don't have to do this. But my own obsession is I love to trade mean reversion, but you really want to give yourself some time before you start, fading the shorts or buying the longs. This is not a bad. You've already had like about half an hour's worth of price action, 20 minutes worth of price action, and if we start seeing the green candle lows get taken out, this one did not get taken out, as you can see. This still stayed. Then we would have a decent mean reversion trade where where basically a lot of this juice that we've seen in the upside has gone out. But so far the trade is pretty much to the upside, and that's the trade. That's the trade you want to be looking at right now as a move. There is no legitimate setup either way right now. We do have a variant where we can say, okay, this is an up candle, the first up candle. Which let's just take this. Again, I want to show this on my own account now so that we can see it. The first up candle in an uptrend, that's generally a pretty decent signal for continuation trades. We don't have a failure candle, but we have a continuation candle that's the first one in an uptrend. So does that give us a modicum of confidence? Yeah. Not the best of the trades, but not a bad trade. And maybe worthwhile taking here for 7. Let's see if we can let's see if that works. Or maybe it's not. Maybe I'm gonna get reversed on this one, just like I got on the other ones. Again, one of the problems is that while I chase the trade up, right? My positioning on the trade. There's two things that you really want to do when you're trading. Ooh, now it's really starting to get negative. So now I really don't have a trade. If this thing goes negative, it's going to stop me out, right? Which is fine. We'll let that stop me out. Now the only real trade we have is trade against this candle. This would be a much more legitimate setup now. If they take out the highs of this candle, so let's just do this. Buy 80. If they take out the highs of this candle, then I want to be in that trade. Absolutely, right? Because that's a failure of the sell candle, and that's fine. but it looks like, the sell flow is really, really starting to take shape here. We took out all the lows. This, if you're trading mean reversion, you're trading the opposite side of this thing. This took out all the lows, but this is a very, very large move candle. So not one I like to, I'd want to short, especially if I get a reversal on this move. So let's just give it a few seconds. Let's see how this trade sets up. There's nothing going on in the Dow. Dow literally has no signals for us. The DAX is just all negative. DAX really, really starting to get negative. That's interesting. Okay. And now, so the trade is negative in all these places. And what I'm actually starting to look at now, or consider in my mind's eye, is reversal trades. Not because, I don't think there's more continuity, because now my probability, my edge, is much more on the reversal side. Like, I don't know how long the selling can go, but once the selling stops, I can have a very reasonable idea of when reversal will begin, right? And that's the thing. Like, this may go for another 30, 40, 50 points, but I just have no idea at how much continuity will happen. But once I get signals for a reversal, I'm more than happy to trade that, and we actually have a legitimate buy signal in the NAS here too. So I have them both in my futures and my CFDs here if it takes out the highs. But so far we're really just trading all the way to the downside. So it's more likely we're gonna have about 10 minutes worth of pretty serious selling. So we really want to see in the Dow and the DAX is when that selling abates and we have a reasonable chance to do a reversal trade. Let me see if you guys have any questions. Yeah, Dow, Dow right now is definitely dropping like snow. So right now, one of the things that we want to look for if we're going to do any mean reversion is we got to beat the highs. Right now, the highs of these candles are way away from us. And what we like to do is have smaller and smaller red candles, and then a big green candle or blue candle that will take out the highs and give us a chance to to reverse the trade. So the Dow is not really. I can't consider that to be a legitimate candle. I need a little bit more here. So we're going to give it a couple more minutes, both on the DAX and the Dow. Let's see what if they can find a modicum of a bottom here for a move back up. Not really. Let me look at my. Okay, I'm going to cancel this because it's kind of the other way around. I'm watching this. I only going to do this on my futures account because again, not a 100% kosher trade, but good enough here to beat. It beats the highs. Let's see if we can, pull this up a little bit towards the 2010 target. So what's my target actually here? 56. Okay, let's see if we can pull it up to 56. That, it's an okay trade. It's not, basically the idea here is that we're still in positive trend. We had the candle beat out the highs. Do we have a chance of a little bit of mean reversion back up towards the moving averages? Let's give that a shot. Let's see how far it can pull. Where am I? 5, 7, 6. Okay, looks like we're pretty much there. Okay, I'll take 8. We'll take 8. Okay, fine. So, again, market showing me we wanted to go back up. I had a positive trend on NAS. NAS was relative strength. Not a bad mean reversion trade. But it's only, it's pretty much good for is just a little bit of breathing space. Now we do have actually, now we can do a legitimate, I don't know if I can do this. I can't do this. No, because it's really moving up against me. So I'm gonna have to cancel this. Wow, I can't do this. Let me see if I can do it this way. Okay, so I bought the Dow. It's a big move here too. I may be wrong, but like here, same principle, mean reversion on this particular candle. I'm actually see if I can put this into 7. Let's put 7. Let's see if I can make 7 out of this thing. Oh, did it go up? Oh, it took me out already. Jesus, sorry, it already took me out at plus 10. Is that correct? Yeah, it just took me out. Where's account history? Yeah, it took me out at 10. Okay, so I didn't even need to get short on this thing. But again, really good example of, okay, markets start turning. So what was, let me just kind of walk you through why I didn't want to short something that was falling, but I was perfectly willing to get long something that was falling on a mean reversal trade. It all goes back to what I was trying to tell you, which is I don't know how much it's going to fall. I don't know the continuity, the extension of that move, right? But I do know that once the sellers kind of exhaust themselves and they've sold everything, they've puked out as much as they can, right? The very natural mechanism of the market on a super short-term basis is to at least bounce it back, and then if for those of you guys who are trading with a 2x tool where you have a long exit and a short exit, when you get lucky and you get a V-shaped bounce, then you can really make 3, 4, 5 times your risk on a really big move. On those rare occasions you get a pure V-shaped bounce. But understanding that stocks are always an auction-based market and it's always a tug of war between buyers and sellers, it's almost never a uniform one-way trade, right? The key thing for us as traders is not to figure out, or at least for us as scalpers, if we're trading like Kathy's way, then you definitely are figuring out direction. What we're trying to figure out is timing and then direction. Because for us, if we can time the bottom, which we just did, by looking at the price action and getting the signal over here, right? We don't need that much direction to win. So, there's a perfect example of where we just took 2 very clean, very straight up mean reversion trades that worked perfectly well. That worked really well to the upside. And there was yet another one. There was another one here in the DAX. I can only one of the things that that I have a hard time with for all of you guys is that I can only focus on one instrument at a time. As a matter of fact, I want to kill this NAS move for right now. Let me actually see what's going on over here. Oh yeah, I didn't have that. I already took that out. Okay, good. So to kind of summarize, trade only legitimate moves, whether it's be mean reversion or continuation. Continuation, in my opinion, the only legitimate continuation move is a failure move, right? Like even this one, there's me taking this one to the upside and getting myself hosed a little bit. That happens more than I care to admit. That happens more than I really want to admit. We almost never succeed with continuation. We always succeed with failure, right? And by failure, I mean they take out the highs of the sell candle, they take out the lows of the buy candle, or they reverse the sell candle, or they reverse the buy candle, in big flows. And at those entry points, that's when we have the greatest chance of success. It's always watching the other side fail that helps us enter. And then once you do, then you really just want to. The other thing I was going to say is that you really, as much as I had enjoyed last week trading 10 5s and stuff like that, you notice that I'm really trying to hold at least to 8 and ideally to 10, because I think the sweet spot for us is a 20 stop 10 target with a 75% accuracy. Yeah, and then that Karen is saying she got clipped on the DAX. Now, here's I don't know. It's up to you. I have my own view on this, but my own view is I can't trade more than 2 instruments. I actually can only trade 1 instrument at a time, right? The more instruments the more you diffuse your focus, the very nature of day trading will make you make errors, right? Less focus, more errors. So some people have an ability to just follow 4 or 5 instruments and just do all the time, or you can just do multiple trades and you don't really care because you're trading a portfolio approach, right? But I just find myself that I need to be very unit focused. So I generally just trade NAS and that's it, and no more trading beyond that, because it's hard for me to I get distracted by everything else. But I'll leave that up to you. So Paul, what were you saying? High volatility is percent of stop loss when change stop loss to 10.5. This is annoying as volatility becomes. So why don't you? No, because all you got to do, Paul, is just pre-change it. Just change it to 200 or just turn it off. If you don't want that. Oh, you know what? Doug did not. Ooh, we should. I should ask him that. Should we take the volatility filter off, or I would just set it for 2, as a default, and just keep it that way. If you want to keep it that way as a volatility filter. I mean, there's always going to be. It's like insurance, right? Insurance costs you money, but it protects you in the end. Seatbelts are annoying, but they keep you from getting plowed into the car. The volatility filter will take you out of trades that you may want to be in, but it will also keep you away from really bad swinging trades. It's just it's up to yeah. So you just change it to 2. Yeah. All right, guys, I got to wrap up because Daniel wants to talk about the algo, and I want to make sure that we get the algo. But it's still not a bad day, actually. I think I had one legitimately bad trade, which was that stupid chase on the NAS. But the other 2 trades all worked well. The Dow. What did I trade? I took the Dow. And I took the 2 NASDAQ wins. So I'll tally it up, but I think we're up at least 10 on the session. Generally, we've been averaging about between 10 and 15 points per session, about 12 points per average per session, and we've had so far, counting today, is 19 out of 20 winning sessions. So it's really been pretty good. And today was much more. Mondays is always much more of a teaching session. Tomorrow through Thursday, we're really going to trade definitively. So hopefully you guys will like that. All right, guys. Thank you so much. I'll post this in a little bit. Everybody have a great day. I'll see you guys later.